Okay, so for the stock project, I named my portfolio the Neil Orans portfolio for kids who can invest good and want to learn to do other stuff good too. It's a reference to the movie Zoolander. If you don't understand it, come up to me after class, I'll explain it. It's a good movie, so you should see it. This here in my hand is called an S1. It is the document that a company needs to file with the Securities and Exchange Commission before they go public. This here specifically is the FireEye S1. Many of you know I invested in FireEye. And I highlighted some things that I think would add value to the class. The first two are red tabs, and they are, on that page you'll find highlighted sentences that show reasons why the stock may fluctuate in the coming quarters. So a lot of the reasons you'll find there are similar to things you may have put in your tracking logs. The last two you'll have to flip around, they're orange tabs, and they are the balance sheets, which show things like quarterly earnings and expense reports. And I've made some annotations so to help you guys understand it better, because it's a bit confusing. This will go around. Okay, going on to my first stock. I invested in General Electric, Netflix, Regeneron Pharmaceuticals, FireEye, and Charles Schwab. Okay, so General Electric. General Electric was founded by Thomas Edison in 1889. It was founded as the Thomas Edison General Electric Company, and then 3 years later it was merged with the Thomson-Houston Electric Company to form what is now known as the General Electric Company, the one that's still here today. It operates on 4 levels: GE Energy, GE Home and Business, GE Capital, and Technology Infrastructure. Energy is things like power, water, oil, and gas. Home and Business is things like appliances and lighting. Capital is the financial services sector, like commercial lending and leasing, and then Technology Infrastructure is aviation, healthcare, and transportation. Why did I choose to invest in GE? So, to start, I actually own shares in GE in real life. I bought it in June of 2011 at $18.34. And I think today it is around $26, $27. It's given me a 40% return on investment, which is very good. Secondly, it's shown stable and constant growth since '09 after the housing bubble collapsed the market. And I felt confident in investing in it. And I used it as a way to compensate for some of my more risky calls like FireEye and Netflix. So you can see it kind of was a bit steady going into the first few weeks. There was a $2.7 billion deal with the Algerian government, which was an oil contract. So that was some good news. I believe that was this jump. And this was the quarter report, showed strong earnings. And then from there, it basically stayed along that price level until the end of the project when it dropped a bit along with the Dow. Some good news in here was the Chinese government shut down a bunch of energy monopolies in China. So it allowed for room for expansion for foreign energy companies like General Electric. My second stock I chose to invest in was Netflix. As many of you know, it's an American online entertainment provider. It was founded in 1997 by a man named, well, 2 men, Mark Randolph and Reed Hastings. The idea for Netflix came to Hastings after he paid $40 in late fees to Blockbuster for the movie Apollo 13. So from there on out, he decided, I'm going to make a company that has no late fees, door-to-door delivery, things like that. The DVD delivery service started in 1997 and expanded to the online streaming experience, which many of you know as Netflix, in 1999. It's partnered with companies like Disney, DreamWorks, Time Warner, Universal Studios, Lionsgate, Paramount, and tons of other companies. And just this past year, it hit 40 million subscribers, 31.2 of which are American. Why did I choose to invest in Netflix? First, technology stocks tend to do well in the recovery phase of the business cycle. It's a pretty simple explanation. Secondly, Kramer and my brother told me to buy. I'll start with my brother. My brother actually owned Netflix. He bought it in November of last year for $70. And the stock, he sold it this past June, fearing it was overevaluated and that it would fall, like similar to what Tesla did in this past quarter. So he sold it at $225, and then it continued to rise all the way to $309, which is the price I entered at in September. So it made him a hefty profit, and he thought it would do the same for me. Kramer told me to buy it because of something called momentum trading, which is when a bunch of people buy a stock and rally behind its success in hopes that it continues to go up in the future. Individual investors will want to get in, and especially investment firms, so that by year's end they can say to their prospective customers, hey, this year we own some of the hottest stocks, so you should come invest with us. Netflix was a bit volatile in the first few weeks. I considered dropping it going into the third quarter. I'm glad I didn't, because it turned out to be my best stock, an 18% return on investment. This was fear of a government shutdown causing the default, and so it dropped a bit there, but then it went up quickly with third quarter earnings report, and they decided to renew their original series, Orange is the New Black, which made investors happy for a second season. And it basically stayed along that price range to the end of the project. A third stock was Charles Schwab. It is an American bank and discount brokerage company. It was founded in 1971 by Chuck Schwab. It started as an investment newsletter, and then 4 years later it became a discount brokerage firm. It was the first in its business to provide 24/7 quotes to its customers. It invested in a mainframe in 1979 to automate record keeping and quotes. In the mid-'80s, it was acquired by Bank of America for 4 years, although then Bank of America hit some hard times and they sold it back to Mr. Schwab. In 1996, right before the dot-com boom, it began online trading for its customers, and then in 2003, it started the bank. Charles Schwab was another case of momentum trading. I believe when I bought it, it was up 48% on the year, so I figured it would continue to go up. And especially in a bull market, people are looking to invest, so companies like E-Trade and Charles Schwab are going to go up. Let's get back to E-Trade in a minute. Charles Schwab did quite well. This was a jump after the earnings report, and it was dampened a bit by the shutdown, although it continued to show success. And just an interesting fact I'll point out was the day that we came in to buy our stocks, September 25th, I believe, my initial investment sheet, the draft, said I was going to buy E-Trade, and I had my mindset on E-Trade. Although I made a last-minute switch to Charles Schwab, which I was considering the night before, and I decided to go through with that. Excuse me. And that actually paid off tremendously. Charles Schwab was up 15.8% by the end of the project, and E-Trade was only up, I believe that's 7-8%, so that was a difference of $1,400 right there. My fourth stock is Regeneron Pharmaceuticals. It is an American biotech company. It's actually headquartered up in Tarrytown. It was founded in New York City in 1988, and then they bought the Tarrytown lab the next year, and then they went public the year after that. Their main product is a product called Eylea, which is, see here, Eylea, it is a drug for the elderly who have ailing vision. It's administered intravitreally, which means an injection to the eye. That's relevant. I know it's cringeworthy, but it's relevant. And they're currently working on a new cholesterol reduction drug, which supposedly is able to reduce cholesterol levels up to 72% more than current drugs on the market. I chose to invest in Regeneron because this was another case of momentum trading. The day I bought it, it was up 73% on the year. And also, it was kind of a race against time. The cholesterol drug is in phase 3 of testing. So that means if it's approved by the FDA, by the time the stock project is over, the stock will jump. So that didn't pay off because it's still in testing, but it could have. The second week, it peaked at around 316, and that's also the reason I was in the lead in the second week, if any of you remember. Then from there, it was basically all downhill. The healthcare fiasco with the website rollout, that shed a bad light on the entire healthcare industry. And you can see this drop right here is their competitor, Orans Pharmaceutical, came out with a drug that does the same thing as the eye injection drug, although it is an eye drop. So people are suspecting that their drug, Eylea, is going to become irrelevant because people would obviously choose to have the eye drop over the injection. My last stock, and most possibly my signature stock, is FireEye. It is an American cybersecurity company. It was founded in 2004 by a man named Ashar Aziz, and it is currently run by a man named Dave DeWalt, who is the former CEO and president of the security company McAfee. As some of you have seen in the S1, it's not profitable yet, although analysts have a lot of faith in this stock, and they think it has a promising future, which was evident in its hot IPO, which went, you can see here, the stock went public 5 days before the project started, and just in that day alone, the day it went public, share price was up 100% by the end of the day. Why did I choose to invest in FireEye? This here says, in it to win it. I knew it was a risky call going in, and I had a feeling it was going to win it or lose it for me. That didn't end up being the case, although it easily could have been. Secondly, my father's advice. My father is in the cybersecurity industry, so he told me that he suspected this stock would do extremely well because it uses like a revolutionary type of cybersecurity to defend against threats. And third, like Netflix, technology stocks tend to do well in the recovery phase of the business cycle. And then actually the night I bought it on Kramer's lightning round, someone asked him about FireEye, and he actually said, I actually think FireEye is a buy. So here's the performance. It was pretty steady going into 5th week, I'd say. And then after that, it dropped off. Their earnings report came out, and it showed that their losses had widened, even though revenue had gone up. So some people sold on that news. And then additionally, something that could have caused this drop, I'm not sure because there wasn't a lot of news on it. It's a small company. It could have been initial investors dropping their stocks after a 60-day hold, which they're contractually obligated to after they invested on September 2021 public. And then some good news was it rose there because they were rated fastest growing technology stock in 2012 by a respected magazine, Deloitte's Technology Fast 500. And also they came out with a new product called email threat prevention. Overall, my portfolio did pretty well. This is misleading actually. It never closed a week under 99,000, although it did close this day under, it looks like 97,000. And then I think after week 4, it kind of peaked and stayed in that price level throughout the end of the project. Here you can see, I don't know, it's kind of dark, but General Electric, Netflix, and Charles Schwab all made me anywhere from $1,800 to $3,600. And Regeneron Pharmaceuticals basically broke even. It only lost me $100, and FireEye only lost me $300. So, and along with my cash reserves, I finished just above 107.8. I think that's it.
Questions for Neil?
Yes, Mr. Grant.
Neil, is your dad bullish on FireEye even though it was down over 1% during the 10-week period?
I think FireEye's future all depends on how it deals with the tech giants in the security sector like Cisco and Kaspersky and McAfee. If they're able to stay one step ahead, because they operate in like a niche market, it's very specific. So if like one of these bigger companies decides to take on a project that just completely blows theirs out of the water, then people are obviously going to switch to like some big name brand like Cisco. So as long as they're able to like stay ahead of the industry, then I think they'll be big.
What's your 5-year price target on Netflix? Right now it's $359 roughly.
5 years, I'm not so sure about, but I know it's a bit overevaluated. A lot of people fear that it's going to take a crash like Tesla did, because Netflix doesn't actually own much. They have a lot of these deals with like Paramount, Lionsgate, Universal Studios, so that if like a better competitor comes out, all these companies are going to switch their deals to that competitor, and then Netflix will be nothing. So I think 5 years, I'm not sure, although I think it is going to take a crash sometime soon because it is overvalued.
All right. Last question goes to Luke Hunt.
I was just wondering why specifically, like, I know the biotech industry is doing well, and clearly you noticed that, but why Regeneron over a more popular company like, I forget the name of the one who produces Pfizer or something?
Pfizer.
Yeah.
Well, like I said, Regeneron was up 73% on the year when I bought it. So like Netflix Netflix was up 231% on the year when I bought it, and Charles Schwab was up 48%, and both of those continued to go up, and they made me money. Regeneron was the one stock I chose using momentum trading that didn't work out. It actually dropped after I bought it. It had reached its peak 2 weeks into the project. So I guess I chose it because of momentum trading. I thought it would continue to go up. And I should have chose, I think, like Arrowhead or one of the stocks that Josh Moore-Silverman chose, because he chose a biotech company that like soared through the roof.
All right. Thank you, Neil.